William, thank you for joining our program today. As the stock market in the region has been very volatile in the first half of this year, can you give us an outlook in the second half?
Sure. First of all, thank you for having me here. Yes, I think over the last 6 to 12 months, we've definitely seen a pretty volatile market that investors are not very accustomed to, say, for the last few years. But I think going forward, what we believe is that volatility, unfortunately, will be with us for a while. But I'm happy to say that most likely second half volatility should be less than first half volatility. For a start, if you look at first half, we were faced with a severe credit crisis globally. We have seen Bear Stearns collapse. We have seen many negative news hitting the headlines non-stop. That's why we believe that second half, yes, remains choppy, but I think the volatility will be a lot more manageable than, say, first half.
As you mentioned, the first half year is very volatile. So why Invesco still decided to launch a new fund?
Okay, for us, I think, first of all, we believe in that the Asian consumer demand theme is only at the beginning of a medium to long-term trend. For a start, economic growth in Asia has been very strong, above most developed markets. Secondly, we've seen that because of the fast growth, income level has been growing exponentially together with growth as well. And then we see consumers in general are very underpenetrated in terms of a lot of consumer goods and services that the developed world consumers are used to. And that is why we believe that all these factors combined will see a pickup in a new emergence trend in terms of Asian consumer demand. Secondly, I think if you look at the timing of that launch, for us as fund managers, actually a pretty good time, I have to say. First and foremost, we are seeing that a lot of attractively high-quality consumer demand companies are now trading at a lot more attractive valuations. Say, for example, China, a lot of these high-quality consumer companies were mostly trading at more than 30 times price-to-earning ratio last year. But this year, they're a lot more cheaper. So for us as building our portfolio, looking at individual stocks by stock, we're seeing a lot more opportunity in buying now than, say, 12 months ago.
Why do you choose to invest in Asia and not the Europe, US or other emerging market like Russia or Eastern Europe?
Okay, if you look at the background of Asian consumers, for a start, as I mentioned, there are 3 billion of them in Asia. So that is about 50% of the world's population. So that's, I think, is one very positive point that you won't find anywhere else in this part of anywhere in the world. Secondly, I think you look at the economic growth progress of Asia, it has been growing very fast. Consumer spending in general has been equally growing very fast. And at the same time, you look at the Asian consumer balance sheets, they are a lot more solid, meaning that high savings and very low gearing, unlike the rest of the world. So even I think emerging markets as a whole is growing fast, but I think Asia still has a very positive dominance in a way that populations are very big and they're very young as well. So in a way, it actually reminds me of the period where the US so-called baby booming period from the 1960s onwards, but for Asia, we're only seeing the beginning now.
Thank you for joining our program
Thank
today.
you.